Welcome to our comprehensive guide on building wealth through safe passive income streams. In this video, we'll explore strategies that allow you to earn money with minimal ongoing effort, providing financial security and freedom. Understanding passive income. Passive income refers to earnings derived from ventures in which an individual is not actively involved on a daily basis. Unlike active income, where you trade time for money, passive income continues to generate revenue with minimal effort after the initial setup. Why choose safe passive income? Opting for safe passive income strategies is crucial, especially for beginners. These methods offer consistent returns with lower risk, ensuring that your investments are protected while still providing growth opportunities. Top safe passive income strategies. High-yield savings account. Overview. These accounts offer interest rates higher than traditional savings accounts, allowing your money to grow over time. Benefits: low risk, FDIC insured, and easy access to funds. Considerations: interest rates may be lower than other investment options, but they provide liquidity and security. Dividend stocks. Overview. Investing in shares of companies that distribute a portion of their earnings to shareholders. Benefits: regular income through dividends and potential for capital appreciation. Considerations: requires research to identify stable companies with a history of consistent dividend payments. Bond overview. Loans made to governments or corporations in exchange for periodic interest payments and the return of principal at maturity. Benefits: predictable income and lower risk compared to stocks. Considerations: returns may be lower, and it's essential to assess the creditworthiness of the issuer. Real estate crowdfunding overview. Pooling funds with other investors to finance real estate projects, allowing participation in property investments without direct ownership. Benefits: diversification and potential for passive income through rental yields. Considerations: platform fees and market risks. Thorough due diligence is necessary. Robo-Advisors overview. Automated platforms that create and manage a diversified investment portfolio based on your risk tolerance and financial goals. Benefits: low fees, ease of use, and automatic portfolio rebalancing. Considerations: limited customization and potential for lower returns compared to actively managed portfolios. Tips for success: diversify your investments. Spread your investments across different asset classes to mitigate risk. Start small. Begin with amounts you can afford to invest, gradually increasing as you become more comfortable. Educate yourself. Continuously learn about different investment options and stay informed about market trends. Monitor your investments. Regularly review your portfolio to ensure it aligns with your financial goals and risk tolerance. Building wealth through safe passive income streams is a strategic approach to achieving financial independence. By understanding and implementing these methods, you can create a steady income flow with minimal ongoing effort. Remember, the key to success is informed decision-making and consistent action. If you found this guide helpful, please like, subscribe, and share it with others interested in building wealth through safe passive income. For more insights and updates, don't forget to hit the notification. Disclaimer: investing involves risks, including the potential loss of principal. It's important to conduct thorough research or consult with a financial advisor before making investment decisions.